Hi guys, KP this side from InvestorWise. Hope all of you are doing good. And this is vlog number 46 in Decoding Equity Markets with KP series. And I'm back with another video today. We have divided this video into four different parts. The first part of the video we will consider the macroeconomic scenario in respect of India, US and China. Why is it important to be discussed? Is because this will have tremendous levels of impact on the markets globally. That's what at least I feel. The second part of our discussion is how US indices are placed right now and how Indian markets are placed right now, and where do I see them going from here. My personal view on that. At point 3, we will discuss two stocks which I feel are a good bet for your money at this point of time. And point number 4 is where I will take up the questions that you have asked me in the last couple of days. I got lots of questions. I'm very happy about it. Keep asking me questions, guys, because if you ask me questions, then I will be motivated to make videos. Otherwise, I will relax on Sundays, which I don't want to do. I'm already relaxed. So the first point of our discussion, guys, is like I told you, the three key macroeconomic scenarios which have unfolded in last 1 week, or what we anticipate in respect of US and China in next couple of weeks or so. 8th of June, India had its monetary policy, and like we anticipated that there will be no hike in interest rates. That exactly happened. The repo rates have been kept unchanged. We were not expecting a rate reduction at this point of time because your inflation is not under complete control at this point of time. So anticipating a reduction in interest rate was not on the cards. If you were anticipating it, then you are being too unreal about it. So repo rates have been kept unchanged. India's CPI has been registered at 5.1%, which which RBI says looks manageable, controllable, no risk involved, but is not the optimum level that we want. This is what RBI governor has said. The GDP forecast for FY24 has been kept at 6.5%, which compared to 2023 is on a lower side, but still is far better when you compare it at global level. Because globally, when you are eyeing at recession in most of the nations, at that point of time, you giving 6.5% of GDP would be considered very, very promising. Very promising, right? Retail inflation, India has given at 18 months low in the month of April, which I again feel is good. I don't know personally how much are you satisfied with that, given the way prices of oil, prices of gas, prices of some of the necessity goods have gone up. But then on record, they have told that retail inflation is at 18 months low. RBI governor, like I told you, he has shown a lot of confidence in the Indian economy. At the same time, he has told us to be cautious about the fact that globally things are still not looking in great control, and that will directly or indirectly pose challenges on India as well. But as far as India as a nation is concerned, our GDP looks healthy at this point of time. Our forex reserves are looking healthy. The forex reserves, back to back, month after month, we are registering higher levels of forex reserves, which is again a good sign for a nation. The FII inflows have been very good in India, which is again a positive sign for us. Inflation is not looking risky at this point of time, but then we need to have more control on inflation, which we anticipate will happen in a couple of months' time. So maybe a quarter or 6 months from now is when you should start expecting rate cuts to happen. And when that happens, that will have a very, very positive impact on the markets. So when interest rates are going up, that is when you are worried. When interest rates are stabilized, they are not increased any further, is when you start getting a breather kind of a feeling. But the real momentum, the real push comes in the equity markets when interest rate reductions will start. That is what India is eyeing on. That is what US investors are also eyeing on in respect of US. So this is regarding the India monetary policy, Indian monetary policy, which happened last week. Post this monetary policy, the bank Nifty has shown some momentum. Nifty was also again pulled up by Bank Nifty probably. Um, uh, but towards the end of this week, that is on Thursday and Friday, overall, if you see, markets were, it was a little sluggish kind of a market. There, we did not experience a lot of volatility, and even the upside was looking more like a congested upside. Means it was not a free upside, and as anticipated, once you see that from 17,800 odd levels to 18,600 has come up very swiftly, so it's not going to happen at the same speed going forward. So some consolidation zone has to be there. I personally take it as a healthy from markets perspective. So in this range of 18,500, 18,600, we can experience some congestion. That is, markets might tend to be a little sticky in this zone before it goes on to its next zone of 18,800, 900, and to set its all-time high numbers. Second discussion on macroeconomic level is China. Now, this is very, very interesting and very, very important, and I'm very sure most of you are not aware about this, is that China is now planning to come up with a stimulus. Beijing will be coming up with a stimulus because they want to, give a kickstart to its economy, because economy from the downtrend in the economy since the COVID times, China basically every 6 months is experiencing more and more infections of COVID, because of which somehow the recovery has not been that great in Chinese economy. China is one big producer as well as a big consumer. So when China is not consuming properly, it starts putting other economies under pressure, because if China won't import from you, by default your exports are gonna go down, and that is where your industry will suffer if Chinese economy is not recovering. Now China has officially announced that they will be coming with stimulus in order to promote a faster growth of its economy, which actually is very good if you see things from Indian perspective also. Focus primarily is going to be on its real estate, which is in dire need of help at this point of time, because the volume of transactions have gone down, overall demand has gone down, people don't seem to be interested in buying new properties, even resale of old properties has drastically gone down, which clearly showcases that at this point of time Chinese citizens are facing cash crunch, and to promote that some kind of stimulus is required, which China is now planning to bring in. If you go by the report of Citigroup, it is anticipating that the stimulus package might be introduced as early as in this month itself, that is in June month itself. They might come up with a stimulus package. Nomura, on the other hand, is saying that stimulus packages may be introduced by China, but don't expect something like they did in the times of COVID. The stimulus size, the package size won't be that big that it will make the markets completely bonkers, or like everything is going to catch a wildfire and go up like that. Economic recovery is definitely anticipated because of the stimulus, but that recovery is not going to be very sharp, is what Nomura says in its report. As I told you, the property sector is what will be their primary focus, because transactions volume right now is low. There are no resale. So what exactly they are planning to do? As per some experts, they will probably, the rates, the mortgage rates, that will be cut down. They will start funding the property developers, and they will also lower the down payments which are required in order to make purchase of a new property or a second hand property. So these are some of the kind of benefits which they may introduce very soon. Good news for China, however, is that for the first quarter of 2023, they registered a GDP of 4.5%, which was above what was anticipated, which is the reason why JP Morgan has raised its 2023 outlook, where they are now anticipating that China will register for the entire year a GDP growth rate of 6.4% as against their earlier anticipation of 6%. China GDP numbers being overestimated is actually a good news, not just for Chinese economy, but for surrounding countries or countries which are involved in some kind of business and the trade alliances with China. They will also benefit, and India will also benefit because of that. Next, Citigroup has also raised its GDP forecast for China for 23 from 5.7% to 6.1%, which actually is a good news. Chinese GDP being anticipated to be higher now, and at the same time China coming up with a stimulus package to promote or to encourage a faster recovery of its economy is actually a good news for us. And the third and the most important point of discussion is the US Federal Reserve decision on interest rates, which will be done on 13th and 14th of June. The Federal Reserve is going to come up with the decision whether they are going to increase the interest rates again or not will be decided in next week, and that will set up the mood for the markets if there is no hike in interest rate. And we are not thinking about a reduction in interest rate at this point of time. That will be too optimistic on our part. But will they increase the interest rates, yes or no? That is what is going to make a difference. Plus how Powell is going to talk about the economic scenario right now. So if this time rate hike is not done, this will be after 10 consecutive rate hikes being done by them in last couple of years. So this is going to set up the mood for the markets for the second half of June. And I personally feel, given the other information, Indian monetary policy was a thumbs up, Chinese economy, GDP forecast being increased, and stimulus packages being introduced now by China. If US in its meeting on 13th and 14th of June, they don't increase the interest rates, I personally have a very strong belief by end of June itself, you might, okay, this is my wild guess, you might see Indian Nifty at all-time high. Maybe. If it does not happen, I'm not the person to catch hold of, because this is just my understanding. I gave you my understanding, I gave you my logics, I gave you my concepts for that. There is no speculation over here. We are just talking about certain contingent events. If they transpire, if they happen, then we are probably looking at a new high in Nifty, which is going to be an all-time high. Now, what is the probability of US going for another rate hike? 86 economists have been asked about it. 78 out of 86 economists feel there will be no interest rate hike in this meeting, which means most of them feel there is no hike in interest rates going to happen this time, which actually is good. But 8 out of them expect that a rate hike will happen, and this will be a 25 basis points hike in interest rate, which is 0.25%. But the interest rates right now are in the range of 5 to 5.5%, and any hike over here probably is going to push interest rates to a very high range. As far as their inflation is concerned, the inflation is right now in the range of 4.2 to 4.4%, which was registered in the month of April, but the target inflation for US is around 2%, which means they're still far away from the target inflation. But that does not mean that you keep rising interest rates, because more and more interest rate hikes from here on, after 10 consecutive interest rate hikes have been done, any further interest rate hike from this point of time is going to put a lot of pressure on banks, because the churning of money becomes very difficult for them, and that I have already discussed in my previous videos. So probably a hike in interest rate is not happening at this point of time. But to caution you on this, even Canada was not expected to hike its interest rate this time, but they did a surprise bomb on the economy, because Canada was not expected to hike interest rates, but they did it again this time, and now their interest rates are standing at 4.75%, which is still less than where US interest rates are standing. But overall, if you see, they are not expecting interest rate hike for this particular the Federal Reserve meeting. Again, some of them are expecting that interest rate hike, if not in June, but it has to happen in July, because Citigroup, I was reading one report by Citigroup, and Citigroup is of a very clear opinion that they should hike their interest rates both in June and July, because they feel that till the time your inflation is not under control, a rate hike has to be done. But it's not so simple, it does not work like this. Every hike in interest rate comes at a tremendous cost, and the cost can be as high as bankruptcy of some of your banks. So you don't want to do that. You don't want to push your economy into recession just in order to bring your inflation in control. Like I always told you, a very tight control on inflation is pushing your economy towards recession. So you want to balance it out. So probably not this time, but we are not ruling out a probability of a rate hike even in future. It might happen. We don't know that. But for this time, we are expecting that rate hike will not happen. That's what we feel. And based on what Powell has said in his last speech also, this is the signal which we are getting. Okay, so these are the three key factors, macroeconomic level, which we need to consider. Now coming to my point number 2 of discussion, how are Indian and US indices placed right now? Nasdaq is at 13,260 on Friday's closing basis. Whatever I told you is holding good even now. I told you above 12,200, Nasdaq will become super strong. Exactly happened. Nasdaq is now at 13,260. Right now, Nasdaq is looking very, very comfortable. For me, any change in viewpoint for Nasdaq is only going to happen if it drastically goes down below 12,200, 12,800. Till that point of time, the outlook is super bullish on Nasdaq. Dow Jones at 33,876. If you remember, I told you Dow Jones between 33,000 to 34,200 is putting you in that zone where there is a gray area and you're not very sure whether it's going up or it's coming down. But I still feel Friday closing above 33,800 is making you more bullish than bearish as far as Dow Jones is concerned. We just hope it is able to cross that 34,200 level. If it does that, then Dow Jones probably, if it is able to sustain above 34,200 levels for a couple of days time, I think Dow Jones is then heading towards 35,300, 35,500. This is my understanding about Dow Jones. For this to happen, one big plus will be 13th and 14th June, no hike in interest rate. If on 13th and 14th of June, the Federal Reserve decides not to hike interest rates, probably we are heading towards 35,300, 35,400, 35,500. And if we go for too much of positivity with this news, it might even go for 36,000. Yes, that level looks very difficult to achieve in short span of time, but I am still going aggressive on this. Indian equity markets have shown a lot of strength, especially with the monetary policy being a favorable one. Nifty stands at 18,563. Like I told you, Nifty is in that zone where it is showing some levels of, stickiness. It's not that free flow upside is happening now. But overall, if you ask me, I'm still very bullish on Nifty. 18,563 is the current range of Nifty till 18,400. A drop till 400, 300, even 200, I would say. Up till 18,200, a fall if happens, I would still call it a healthy fall. During a bull market, during an upside in the market, some corrections are very important because that gives you a sign that investors are rational in the market, and some level of profit booking is important for markets to have a very, very consolidated zone. So that exactly is what is happening right now. Up till 18,400, or if I have to stretch that, I would say up till 18,200 also we are fine. Only below 18,200, if it goes, there has to be some serious reason for that, and that may bring a change in your outlook and perspective about how markets are placed for next 15-20 days or so. Bank Nifty standing at 44,000 is looking very, very strong. If I have to bet my money, I probably would like to do that on Nifty rather than on Bank Nifty. And instead of going for Bank Nifty, if I have to be stock specific, my top 2 picks from banking sector would be HDFC Bank at around 1610 with a clear-cut target of around 1700 plus. I don't know why HDFC Bank has been penalized for no reasons. But HDFC Bank looks quite strong to me. If you have to bet your money, probably not going for Bank Nifty, you should rather go for HDFC Bank at 1610 odd levels for a target of 1700. Block deal happened in Kotak Mahindra Bank last week, because of which it was also under pressure. But for me, Kotak Mahindra Bank is one bank which has literally not performed in this high in this upside in Bank Nifty, and Kotak Mahindra Bank is another stock from banking sector which I would like to buy in the range of 1870, 1875 with a target of 2000 in mind. These are my top 2 picks from banking sector. What did I say? They are not my top-notch picks, but I said if somebody wants to bet on Bank Nifty rather than going for the index, you go for the stocks. 2 picks being HDFC Bank and Kotak Bank. Nifty is looking strong to me, and like I told you, if US interest rates are not increased, and if we get a clear-cut image on when China is going to declare its stimulus, probably we are going to see a new high in Nifty. Where would I like to put my money in Nifty stocks? I would still go with IT. IT is my top pick even now. And coming to my third part of discussion, where I have to give you 2 stock picks. I gave you 2 bonus picks, HDFC Bank and Kotak Mahindra Bank. But my top 2 picks right now, first one would be Tech Mahindra at a price of 1063. Looks very safe to me, guys. Very safe. You want to put your money in safe stocks when markets are at all-time high or very close to its all-time high. You want to go with safe picks. You don't want to go very aggressive. You go aggressive when markets are going down. When people want to sell, that is when you want to buy. But when markets are going up, that is when you need to exercise caution. Less money is better than no money or negative returns. So go with stocks which are safe. So my first pick would be Tech Mahindra at 1063. 5 rupees is the face value of this stock. This stock is having a PE of 21 times. Compared to IT sector standards, it's still on the lower side. Has an EPS of 58 rupees. Price to book value of just 4 times. Yes, 4 times is normally high, but for IT sector, 4 times is much less than the standard. Last week, I read a news that LIC has increased its stake in Tech Mahindra from 6.8% something to they have taken it up to 8.6% something, which means effectively by 2% LIC has increased its stake in Tech Mahindra. FII and DII together hold more than 52% in this company. More than 52%, which is very good. On 30th December 2021, the stock has done 1838. I'm not talking about its 52-week high, because 52-week high for Tech Mahindra won't give you a very good number. But if you look at its high in last couple of years, on 30th December 2021, it did 1838, which means the stock is almost available at a discount of 45%, which makes it a very, very safe bet at this point of time. I am still super bullish on IT sector. Super bullish. You want to criticize me for that, you do it. I am bullish on IT sector. And in my last couple of videos, I told you to buy Coforge, and my Coforge target was done. I did share a small extract of my video where I have spoken about Coforge at a rate of 4278 with a target of 4600, 4700. 4600 target was done in no time, if you remember that. Tata Chemical, Polyplex, these are some of the other shares which I recommended in my video. Tata Chemical, we were unlucky. It went up to 1030, I think. My target was 1050. I gave it a buy recommendation. I gave my buy recommendation at around 970. Target did not happen, but still, if you would have purchased in good numbers, probably good profits you would have seen in Tata Chemical. But I'm still bullish on Tata Chemical, guys. Hold it till you see the levels of 1050, 1060. Definitely hold it. My second pick is Rajesh Exports. Now, Rajesh Exports is something you should only buy if you have patience. If you don't have patience, don't buy Rajesh Exports, because it is a low beta stock. The volume of shares being traded in Rajesh Exports are less. Probably on Friday, some 6 lakh shares were traded, which for NSE standards is very low. But this is gem of a stock, guys. A company in diamond and jewelry business, generating most of its revenue from exports. It is one of the Fortune 500 companies. I have done an extensive video on Rajesh Exports in the past, maybe around a couple of years back, when it was trading around 480, 490. It went up to 1030. From 1030 today, again, it has dropped down to 570. It is a stock which should be a part of your portfolio, but it is a low beta stock. That is, the volatility in this stock is less. So people who don't have the patience to hold it, don't buy. But if you have the patience, you buy it at 570 with a target of 675 plus in mind, and it can shoot up to those levels at any point of time. This is one stock which can surprise you. Like today you buy, tomorrow itself it can go to 675, or it may happen that 6 months there is no movement. If there is no movement, don't come and criticize me, because I have made it very clear that this stock is everything about this stock is unexpected. Sometimes it will shoot up like anything in a day. Sometimes it will not show you any momentum at all for 3 to 4 months. All this kept aside, stock is fundamentally beautiful. Have it in your portfolio. Listen to my advice. When it will do the targets, I will get back to you. Keep it in your portfolio. Safest option to have in your portfolio at this point of time. Safest. As safe as ITC. Okay, that sounds good. As safe as ITC. Company is fundamentally stupendous. A PE ratio of just 11 times. Just 11. Very good. 49 rupees EPS at face value of 1. Stupendous. Very good. Price to book value of just 1.15 times, guys. You can't find a cheaper stock in the market compared to this one. It's a very good stock. Only problem with this company is that its net profits in last 5 years have not grown much. But the volume of business it is doing is humongous. Humongous. The amount of exports it's doing. It's a specialized company in its area of operations. So have it in your portfolio. 675 is a short-term target I'm giving you. Hold it. Actually, it should be in the range of 800 to 900 itself. Or even 4 digits, 1000. Last time when I did a video, it was around 480, 490. It did know 1000. In 2 years, it did know. In 2 years, your capital doubled if you kept it for that long. So have it in your portfolio. Short-term targets, like I told you, 675, 680. If you want to keep it for longer time, 800, 850 also you can hold it. Okay. Only 17% equity is held by public. Only 17%. I love those companies where public holding is less, because the moment share comes in the hands of the public, no, it becomes a garbage share. When more and more shares are being held by public, it becomes a garbage share. Let promoters, DIA, FI enjoy the holdings. We should only get 3 to 4% in our hands. Otherwise, we start controlling the prices. और हम लोगों का जिगरा नहीं है. हम लोगों को market में काम करना नहीं आता. We don't know how to trade in markets. Bloody one bad news will come, not even a bad news. Some news will come, we start selling at any price. So don't do that. This is a gem of a stock. Have it in your portfolio. Repeating it one more time. Tech Mahindra at 1063 you should buy with a target of 1135 in mind. Very strong company. LIC has increased its stake. I don't have to say much to you. Rajesh Exports buy at 570. Short-term target 675 plus. Long-term target 850 to 900. Okay, done? Okay, so 3 things we are done with. Market overall, I have told you I am bullish on the markets. Till the time Nifty does not drop below 18,300, 250 range, I am not going to change my outlook on Nifty. Bank Nifty, I won't trade in Bank Nifty. अगर मेरे को बैंक निफ्टी में काम करना है, I would try to hedge myself by going short on bank nifty, because I have long positions in futures or I have a portfolio, long only portfolio. I would like to hedge myself by going short on bank nifty. This is my strategy. I don't recommend doing it to you, but this is my personal strategy. If I have to go bet on something, I would bet on HDFC Bank and Kotak Mahindra Bank, because these 2 shares have literally not participated in the rally in bank nifty. Makes sense to you? Okay. Now I am taking up the questions which you have asked me. I have got plenty of questions to answer. I would suggest other people, other listeners also to go listen to this part of the video, because in the process I will discuss a lot of stocks. So it will help you. Okay. And if you find some of them in your portfolio, it will help you to understand whether you should keep it or not. So Prashant is asking me, how about Avanti Feeds? Avanti Feeds is a company which is involved in exports of these, fisheries products. Aqua, what we call it, aqua, I don't remember the exact term, but aqua related products. Okay. I have done a proper video on Avanti Feeds also in the past. Right now trading at 382, 52-week high is 527. Share is trading at a huge discount right now. But post-COVID, because the company is involved in exports and a lot of subsidies which were given in the past to these companies are now being withdrawn. This is the reason why these companies have not been able to perform so well in last 3 to 4 years. And that is why it is testing your patience. That is why I have personally stopped giving fresh buy recommendations in Avanti Feeds and Apex Frozen, the other company from this same line of operation. But if you want to have it in your portfolio and you want to keep it, Prashant, then you can keep it. But immediately will you see good appreciation in the stock price? I am not very sure about it. Okay, because since COVID times, the revenue and profits have not picked up for this company. The return on equity has drastically in last 5 years gone down from 24% to 13%, which again is a negative sign for the company. But having said all this, if you have it with you, definitely hold it. If you want to buy and keep it, probably look for better alternatives. I am not much keen at this point of time to buy them. There is lack of clarity about their business. Shravan is asking me why IT was down last week. some profit booking has to happen, Shravan, right? Some profit booking has to happen. And there's another reason. There is a company from US which is EPAM system. If I read it right, EPAM system, their results were not good and they have reduced down their forecast for the next 1 year or so about revenue forecast and profit forecast. But then what I'm telling you is, मजाक चल रहा है क्या? IT में मजाक चल रहा है. Is some kind of a joke going on with IT? Infosys does not post good numbers, the share will go down. You will butcher that stock. If guidance is not that great, you will again start selling this stock. If some Tom, Dick, Harry company in US is not giving good numbers, again you will start selling IT. I don't understand what is wrong with people. The tolerance for IT has become so minimal right now that people are just looking for reasons to sell IT. I don't understand that. I don't understand. Some people come and tell me IT will not perform. Why, boss? Because AI aa raha hai, artificial intelligence aa raha hai. What the heck do you speak, man? Apply some sense. Talk some logics when you say that. Artificial intelligence in IT industry is only going to make life better for them. Their productivity, their efficiency, everything is going to increase because of that. That will have a positive impact. Businesses will grow multifolds. If artificial intelligence is going to be introduced in IT sector, it is going to enhance their businesses. So just because one US company gives a slow guidance or not a very strong guidance, IT industry in India is also penalized. Most of these stocks are already at 30-40% discounts. So continue with IT. That's what I would say. Next, he's asking me, what is your take on EV? Electric vehicles. Top pick, I have always told this. I told this during my last moderate trading picks also. In EV sector, Tata Motors at this point of time is my top pick. But I feel that other companies are also going to participate in the EV race. And over a period of time, that right now, this notion which we have that Tata Motors is only going to lead from the front, probably that superpower title Tata Motors will not enjoy, because everybody will join the race, be it M&M, Ashok Leyland, Escorts. Everybody would come into that kind of a zone where they will start promoting production of EV, electric vehicles. Right now, since auto stocks have shown so much momentum, I personally don't want to take any fresh buy positions in auto sector. I would wait for some corrections to happen, some corrections. That is where I would like to re-enter into auto sector, not at this point of time. Prithvi is asking me, what's your take on debt impact on stocks? Very simple. I explained it in my last video also. Debt is not bad for the companies. One condition being, if the debt is being used to generate higher returns for equity shareholders, then that is good. But if your debt is too high, which is putting burden on you in the form of interest cost, then we don't like that kind of a debt. So ideally, when companies are doing very good in their businesses, if they still feel their business can grow further, then raising debt is not a problem. But if the burden of debt is too much and you are borrowing more and more, but you are not able to utilize that debt properly to generate better revenues, then that starts looking painful. So when I am doing analysis of companies, I will have to see, with the amount of debt that company has in its book, in last 5 years, has company given me better profits? Are the revenue for the companies growing? How much on my EBIT is the interest burden? If interest burden is going up but my profits are shrinking, then it's better to stay away from such companies. If debt is being borrowed at 10%, 11%, 12%, but company has avenues, has projects where it can generate 17, 18, 19%, then that extra which you are generating is going straight into your shareholders' pocket, promoters' pocket, the owners of the business. Then that is okay. How Vedanta or Tata Steel debt looks to me right now, I won't discuss that because I discussed it in vlog number 45. So you have got to see that vlog because I've already discussed that. Ravi is asking me, next question is from Ram is asking me, where do I see Nifty by year end? at least 19,000 is what I anticipate. Maybe this will be a Diwali gift for us. If, like I told you, I am being super bullish right now given the other information which I shared with you. But if it does not happen in the month of June, because sometimes when we are too much bullish on markets, some or the other bad news will come in and spoil the party for us. But I think this Diwali we might be gifted with 19k of Nifty. That's what I feel. Second, he's asking me what is my take on LIC. It's a good company, boss. LIC is one company where you cannot buy it with the motive of selling it in 3 to 4 days. LIC is something which should be a part of your portfolio. The IPO was launched in the price range of 918.20. I think that's what I remember. Right now, trading at 600 odd rupees. This is a one good stock. I don't have to tell you how good the brand image of LIC is. This year, company has done stupendous profits also. This quarter itself, the company has given 13,000 crores of net profit. That was for the last quarter of financial year 22-23. Annually, if you see, the profits have grown from last, if I compare annual 22 with 23, 4,000 crores of profits have gone up to 36,000 crores. EPS is 57, and the worst part is that right now FII, DII do not have holding in this company, because promoters are struck with their holding in this company. Promoters are holding close to 96% because they never got a good opportunity to come out of the company, and promoters will have to reduce their holding ultimately to 75%, and that is where I feel the participation of FII and DII will happen in this stock. Once that happens, that is when you will start seeing some bombarding in LIC. Till that time, it's something good to be a part of your portfolio. But if you think the upside is thick and fast, not happening. But is it safe to be part of your portfolio? Low beta stock should be a part of your portfolio. Numbers are good. Numbers are supporting an upside in this stock. Next, Vijay is asking me how about India Bulls Housing. It's a good stock for the price. If you're stuck in the stock, then you should hold it, I would suggest, because it has already penalized you a lot, I feel. Fresh buy in India Bulls is something I would not suggest, because last 5 years revenue has almost reduced down to 50%, profits have reduced down to 25%, which is not a good sign. Change in management happened, change of hands happened for the management, but still the new management is not looking so effective, because that is not reflecting in the numbers for the company. So if you want to have it because you already are holding it in your portfolio, keep it for some time. Don't book losses is what I would suggest. Fresh buy, I would refrain the fresh buy right now. Okay, Prashwa is asking me some strategies and options which you can suggest for newbies in the market. First of all, if you're a newbie in the market, don't do options, because options will take away all your money. Because problem with options is that losses in options look small if you can control the number of lots you are trading, but that small losses can eventually become a big loss for you. So if you don't have knowledge, then I suggest not to do options. But if you still ask me what are the two safe strategies, one strategy I told you in my last video also is the straddle strategy. STRADDLE. Straddle strategy is where you buy both the call and put option on the same stock with same exercise price. Generally, you can use straddle strategy on Nifty. Like 13th and 14th of June, you feel if rates are not increased by US Federal Reserve, markets can go up. If the rates are increased by Federal Reserve, markets can go down. So you don't know which side markets will go, but you are expecting volatility in the market. That is when you can use a straddle strategy. Nifty 18,500, call you take, put also you take. If volatility is too much, then you will make returns on either side. If it goes up, call will give you money. If it goes down, put will give you money. So only if volatility is there, then straddle is something you should take on Nifty or Bank Nifty. Okay. The second strategy is a bull spread. It can be a like bull call spread is something I like doing with my clients. Bull call spread is something where you think stock can go up, but the upside will be limited. So what we do is we buy a call and we buy a call at a lower exercise price and sell a call at a higher exercise price, which means, let's say right now Infosys is at 1250. I feel it can go up to 1300, but it will not go up to 1400. So for June month itself, I will buy a 1300 call and I will sell a 1400 call. The advantage is you minimize your losses with this. If you only buy a call, you will end up paying high premium. But if you also sell a call at a higher price, then premium will be an inflow for you. So that way you can reduce your total premium outflow. So that is called a bull call spread. When you use this strategy, when you see a stock can go up, but you feel the upside is limited, so you buy a call at a lower exercise price and sell a call at a higher exercise price. Okay. If you want more details and if you seriously want to learn option strategies, go for my Equipedia program. I'm not trying to cross-sell my program, but I'm very confident my Equipedia program is the most exhaustive course on equity markets you will find in the market, and a genuine one. Okay, no bakwas, no bullshit, all practical examples. Everything that I learned in last 12 years in the market, everything has been shared in that course. Made it very affordable now. We are charging just 14,000 rupees for the combo, that is core program and the pro program, that is where you learn a lot about the learn a lot about the FNO. Okay. Ajit is asking me, how do you make a mindset for intraday trading? I never have a mindset for intraday trading, because intraday trading is not trading, it is speculation, it is gambling, and I hate that. My only mantra is fundamentally good stock where I feel I can see some momentum in short term. I target those kind of stocks, but I never sit with intraday mindset in front of the screen. I never sit with that kind of a mindset, because I am a strong believer nobody can make returns if your only strategy is to do intraday trading. Eventually you have to give your money to the market and say a goodbye. That is going to happen eventually, no matter what people tell you, but that is going to happen. Mukund is asking me, what about Yes Bank and SpiceJet? I would suggest have both the stocks in your portfolio. If you already have them, you should keep them with you. Yes Bank has slowly and steadily come out of the problems which it had. Still the momentum is lacking in the stock, but I think risk profile for the stock is very good. Downside is very limited, but upside can give you multifold returns. So have it. Since most of the companies in aviation sector have not performed or are going out of business, after Interglobe Aviation, SpiceJet is one promising company which is at least trying to keep its position intact in the aviation sector. So if you have SpiceJet, then continue holding it, because this is not soon going to go out of business. The problem with SpiceJet is that it has to sustain profitability, which is not happening. Some quarters it will have profits, again it will go into deep losses. That is why they are not able to have a price command like Interglobe Aviation, but otherwise the stock is good. I think it's Nikesh who is asking me about Sona BLW. So, Nikesh, I don't personally track Sona BLW, but it's an auto ancillary company, but at its current price, I would not do a fresh buy. And if I have it, I would probably book profits. Because for me, PE ratio of 80 times, price to book value of 16 times, no matter how good the company is not justified. Plus, I just said few minutes back that for me, auto sector, good upside has happened in last couple of months. So obviously when auto sector does well, auto ancillary will also go up. But there has to be a point of time where they will push brakes and the stocks will stop, stocks will stop showing the same level of momentum. So it's suggested that you please book your profits if you have it. Fresh buy, definitely no. It's a no from my side, because company has just an EPS of 6 rupees, trading around 535, 540 rupees with a 52-week high of 600. I don't want to put my money into this stock. Varun is asking me, how about BASF? BASF is good. You can have it. Company involved in pesticides and agrochemical. It's a good stock, Varun. You can have it in your portfolio. Alternatively, like I told you, UPL is another good stock which you can keep in mind if you want to diversify from BASF. I think UPL is a very good stock. Nikhil is asking me, Laurus Labs, my views on Laurus Labs. Good stock. Have it in your portfolio. Buy at a rate of 340. If you already have it, average it down. And if you don't have it, buy at 340 with a target of 420, 430 in mind. Definitely you should have it. Rohan has asked me about India Bulls. I already answered. And he also asked me about India Pesticides. Again, if you have India Pesticides, I would suggest take out your money from India Pesticides and go for UPL. That would be a better choice. Again, a company in chemicals. I personally find UPL to be better placed compared to India Pesticides. And this stock has been sluggish from the time it has introduced its IPO. So it's better that you switch your money now. Suraj is asking me about OCCL and Shyam Metallics. Both companies are in metal sector. If you have them in your portfolio, I would suggest diversify your money. Don't completely book losses. Part of Shyam Metallics you can sell, put that money in Vedanta. Part of OCCL you can sell and put that money in Tata Steel. 50% OCCL and 50% Shyam Metallics you can keep. Both these stocks are very good. But if you want to keep the money in metal sector itself, switch some of your portion money, maybe 50% in Tata Steel and Vedanta from these two stocks. Okay. Ganesh is asking me SW Solar and CESC. Both are good. You can have them in your portfolio, but I'm making it very clear these two stocks will lack momentum and not give you good returns in short span of time. If you're stuck at high levels, don't average out. Just keep them in your portfolio for the time being. Dharmesh is asking me MGL. How is MGL? Exit MGL around 1100, which I think happened few days back. If you have long-term vision in mind, then you can continue holding it. But I don't personally see any reasons for MGL to go up from here, because now gas-related shares, they are highly impacted by macroeconomic situations. They have become very news sensitive. And most of the times these gas and oil related shares are mode of experimentation for the government. So I would suggest exit the stock at around 1100. Irshad is asking me, should we see consolidated or standalone numbers when we are looking at the PL income statements for PL and the balance sheets? I would suggest go for consolidated numbers. I always go for consolidated numbers because pricing of stocks, the market prices of stocks, the demand supply of stocks are created based on consolidated numbers, not based on standalone numbers. So I personally suggest go for consolidated numbers. I hope you found the video useful, guys. I will try do more and more videos, and apart from that, if you have any doubts, you can always get in touch with me either through WhatsApp or through social media platforms or through YouTube. I'm trying to be as active as possible, and I'll try to do videos in the short gaps of 6 to 7 days. At least I'll try do that. Sometimes your work commitments, the pressure at work, because most of my work I handle by myself. I don't have kind of a team where you can go on autopilot mode. Does not work for people from finance background. We have to handle everything on our own, and everything is based on decisions that I take. So a lot of times I'm too much caught up in my work, but I understand making videos is very good to give you that level of maturity which you should have when you're coming into the markets. Okay, chalo, take care, guys. Stay bullish about markets till we meet again. Take care of yourself. Bye bye. God bless all of you. Thank you.